Hi, I'm James Lim, founder of the Property Plus system, and today I'll be sharing with you how Singapore property has been performing for the first half of 2022. In Q2 2022, 2,397 new condominium developments were sold, while 4,440 resale condominium units were sold. Compared to Q1 2022, new sales volume increased substantially by 31.3% from 1,825 transactions, while resale grew by 25% from 3,518 to 4,414 units. The subdued transactions in the first quarter of the year is mainly due to the wait-and-see approach by home buyers on the reaction of December 2021 cooling measures. It took about 1.5 quarters before demand re-established itself in the private residential market in May 2022, when the launch and sales momentum of Piccadilly Grand and Live at MB acted as the catalyst motivating buyers. As for pricing, the property price index increased 3.5% in Q2 as compared to 0.7% in Q1. Again, the launches of Piccadilly Grand and Live at MB in May sparked the market and moved prices upwards. These two projects in the rest of Central Region, RCR, captured home buyers' attention and rekindled public interest. As such, the non-landed price index for the RCR jumped by 6.4% in Q2 of 2022. These launches are able to jumpstart sales activity given that there is strong underlying demand for new projects. Overall, there are more buyers than there are sellers in the current home market. The current tight supply of sellability inventory is playing catch-up with the demand due to the backlog of delayed new completions and lack of new development land during the initial years of the pandemic. The URA or Residential Price Index has now increased by 4.2% in the first half of the year despite the cooling measures. Nevertheless, I expect growth but not prices to taper in the coming months as rising interest rates rein in home buyer purchasing power. This will happen likely in Q4 2022 when there are fewer launches and year-end holiday. In Q3, we will still see strong demand and high transaction volumes from other new project launches such as Amo Residences in Ang Mo Kio, where 98% of the entire development was sold on the first day. There is also going to be higher than expected demand from other new launches coming up such as Senica Residence in Tanah Merah, Eden at Bedok, and Lentor Modern at Lentor. Overall, private residential prices are now projected to increase around 5% to 7% for the whole of 2022 against the initial conservative forecast of 1 to 3% growth when the cooling measures were announced in December 2021. Buyers have shown an unanticipated resilience, the kind that will give developers more confidence to launch projects to tap on the buyer demand before interest rates increase further. Notwithstanding the additional buyer stamp duty or ABSD for foreigners, interest in Singapore homes in a flight to safety is also likely to gain momentum with increasingly open borders. New sale volume should now start catching up and remains on track to reach 8,000 to 9,000 units for the whole of 2022. The URA rental index for private residential homes increased 6.7% quarter-on-quarter in Q2 2022, reflecting a gain of 11.2% in the first half of 2022. With the world opening borders, air travel on the rise, and the land border with Malaysia now open, the inflow of expatriates and professionals can only increase, and with it, the demand for accommodation. However, time will be needed for projects affected by construction delays to complete. Companies who have not adjusted their accommodation budgets accordingly for expatriates might face challenges setting in their employees. In addition, rental demand will be driven by local buyers who have not found a replacement homes. Inflationary pressures also have a knock-on impact on rents, as landlords who wield greater negotiating power will transfer the increasing costs or rent to the tenants. In conclusion, I expect prices to continue to grow and slowly taper off at the end of the year. In my personal opinion, this is now the best time to sell a property, as it will fetch you the greatest return due to a strong demand. If you would like to have a one-to-one discussion on what you should be doing now, feel free to drop me a text in the number shown in the description below. And if you see value in this video, give the video a thumbs up or click on the subscribe button below to be notified of future videos. It makes a big difference for us. See you in our next video.